can't really control the fluctuations in the market. You can control your reactions to them. So in this particular case, my view on Bitcoin is the reason to do it is because it represents freedom and sovereignty, truth, integrity, and hope for the world. And that being the case, it's going to outlast all of us. So, I'm kind of thinking the Bitcoin goes on long after MicroStrategy's gone, and MicroStrategy, the company, probably goes on long after I'm gone. My view is, if we're remembered for advocating and accelerating the adoption of Bitcoin throughout the world, then that will have been success, and I don't really need anything else.
It's amazing.
And I'll take the beatings as they come or go in order to get to that end goal, because I'm sure it doesn't come without turbulence.
The next 10 years in Bitcoin will be revolutionary. Ignore the short-term market fluctuations, they don't represent Bitcoin's true value at all. Bitcoin represents freedom, sovereignty, truth, integrity, and hope for the world, and it's bound to outlast all of us. This is the latest message out from Michael Saylor. In his latest interview, Saylor shares a compelling view on Bitcoin that goes beyond its value as a currency. He also gives us a clear look into Bitcoin's booming period, which started in January 2024 with the introduction of the ETFs and leads to 10 years of unmatched growth until 2034. During this time, as we get close to mining 99% of all Bitcoins to ever exist, the digital currency will become a permanent part of global finance. He strongly believes that Bitcoin's legacy will continue to offer hope and freedom long after all of us are gone. Before we jump into the interview, I want to let you guys know about the portfolio tracker that I personally use to both save time and manage my entire crypto portfolio all from one spot. I use CoinStats to manage my portfolio, so I'll be taking you through it here. CoinStats is awesome because it connects to pretty much any exchange or wallet and downloads all of your transaction history so you can keep track of your portfolio easily. If you don't want to connect, you can also do everything manually. It has heaps of cool features like portfolio analytics and historical graphs, which means it does all the heavy lifting for you. If you're someone like me who uses multiple wallets and exchanges, it's an easy decision to use a tool as useful as this. Additionally, CoinStats has an easy-to-use mobile app with a great user interface so you can check all your balances at a glance. If you are in the crypto space, CoinStats is a small investment that will save you a ton of time and headaches in tracking your positions. If you want to give it a try, CoinStats is giving Jamie Tree viewers a 43% discount using my link in the description below. But for now, back to the video, here's Michael Saylor with his latest Bitcoin insights.
I think 2020 to 2024 was, the high volatility, high uncertainty. It's like that early stage of institutional adoption, but really, we start mainstream institutional adoption, I would date it to January 2024 with the approval of the ETFs, the spot ETFs. And I think it runs, we have about a 10-year gold rush. It runs to 2034 November. Between 2024 and 2034, we will have mined 99% of all the Bitcoin. So Bitcoin becomes, for all practical purposes, fixed by November of 2024. The last 1% comes out over 100 years. Okay, so we have this 42-quarter period where at the beginning of the period...
What percentage are we at now?
Right now we're like 94%.
Wow.
So you think it's not much, but 5% is a lot over 10 years compared to 1% over 100 years. So there's actually still Bitcoin available for sale right now. The miners have to sell it. So at the beginning of this period in Q1, we're in Q1 now, if you go to January 1st, no institution could buy it even if they wanted to. It just wasn't on their radar. And so you really have 42 quarters of people learning what it is, studying it. It takes 10 hours to scratch the surface, and it takes 100 hours before you get a degree of comfort. Most people, once they get past the age of 40, they don't want to spend 100 hours learning a new thing. It's very rare. So you've got Wall Street firms spinning up massive education apparatus. You've got a whole set of stages of adoption. First, can I buy it? then is it on the approved list for solicited sale, then it is on the approved list for unsolicited sale. Is it marginable? Can I borrow against it? Is it optionable? Can I hedge it? Is it recommended? Is it structural? Is it built into a fund? That's like 7 layers of adoption. People take a year to think about each of those layers. There's 100 powerful entities that control huge amounts of money that will go through that in the Western world. So I think we're in this institutional education stage. And in 2034, it'll simply be the new thing. Right now, it's like the scary, exotic thing for most people. Well, I think that the biggest challenge of Bitcoin is that the industry refers to it as a cryptocurrency, and oftentimes people refer to it as a digital currency, and there's a very vocal contingent that wants it to be a currency. And the rest of the world doesn't really understand money. So if you say to someone, what do you think about Bitcoin as digital currency? They say, well, I think it threatens the dollar, I hate it. If you said, what do you think about Bitcoin as digital property? You know, I'm going to buy it instead of buying a building in Des Moines. They're like, oh, have at it. If you simply conceptualize it as property, which is store of value, all of the objections, all of the straw man objections, like it's used for money laundering, it's not legal tender, I can't buy coffee with it, it's not fast enough, it's not private. All of these things disappear because it's about as stupid as saying to Bob Kraft, you can't buy a cup of coffee with the New England Patriots by breaking off one of your tight ends. And you can't buy a cup of coffee with your building in Boston. So of course I can't. You can't buy a cup of coffee with part of a Picasso, the lower left corner either. But wealthy people have been using them as a store of value and as money for 500 years. Everybody looks at Bitcoin and they think, well, how do I create the next Cash App or the next mobile app or the next Fidelity or the next Coinbase or the next whatever? And they think really hard about that, or how do I topple JP Morgan? It's like, that's a very difficult thing to do. I'll give you a very simple idea. You have a treasury in your company. If you put your treasury into sovereign debt, you're going to yield 5% pre-tax, 3% after tax, and you're not going to beat the cost of capital. The cost of capital right now is 8 to 10% in the US. Easy. So if that's the case, your treasury is a liability, which means that any rational person would look at you and say you should decapitalize, you should run on the minimum working capital or negative working capital, and you should run on debt. But I'll give you another idea. If you actually are investing in something you expect to go up 20 to 40% a year for the next decade, you're beating the cost of capital by a factor of 2. That means the right thing to do is go back to your venture capitalist or your bank and just raise $100 million that you don't need and buy Bitcoin with it. Because if the business you're running doesn't work, you will have a business that's growing 20 to 30% a year, scalably, for the next 30 years. That will work, right? You'll double the 100 million 2 times in the next 6 years. So you'll be 200, 400 million. In 6 years, when the thing that you're doing right now doesn't work, you're gonna have a business that's growing 20% a year off a $400 million base, which is a monopoly. So I think the number one, this is a simple hack, but every venture capitalist in the world is getting 2 and 20. They're getting a 2% management fee and a 20% participation. And their mandate is they have to invest in operating businesses that are private. And if they were to go and buy $1 billion of Bitcoin with limited partner capital, their limited partners would say, are you crazy? I could have bought the Bitcoin. So the VC can't buy Bitcoin, which is the risk-free return of 20, 30% a year. The VC can give you the $100 million, you can buy the Bitcoin. They end up with debt in a private company. You end up with $100, $200, $500 million business growing 20, 30% a year that's scalable that you run with yourself and your CFO. It's good for them. They're going to make a fortune. They want to invest the money. The real problem in the world, and by the way, this is back to the Tao of Steve. In the Tao of Steve, there's a guy sitting on the bed and he's smoking marijuana, and someone's saying, well, you know, like, why aren't you out there doing something? He says, doing stuff is highly overrated. Okay? So here's the big idea, which is there's a couple $100 trillion of capital in the world that's debasing at 10% a year right now. And the big idea is just stop investing in toxic money, right?
So there's Michael Saylor reminding us of Bitcoin's true value. It's clear that regardless of market fluctuations, Saylor's view of Bitcoin extends far beyond its financial implications. For Saylor, Bitcoin represents a commitment to principles like freedom, truth, and integrity. He envisions a world where Bitcoin not only survives but thrives as a testament to these values, outliving companies and individuals alike. According to him, we are currently in a Bitcoin gold rush, sparked by the acceptance of the Bitcoin ETFs. It will last from 2024 to 2034, and this period will be the best time to acquire more Bitcoin before it all runs out. This period isn't just a time for financial growth, but a transformative period for how we understand and adopt this massively successful asset. If this content resonates with you, don't hesitate to subscribe and like the video. Your engagement helps continue to bring you insightful and timely content. Anyway guys, hope you all enjoyed today's video and it provided you with some value. I'll see you all in the next one, and as always, all the best.